Hi everyone, welcome back to the podcast. Today, what am I going to talk about? Today is Wednesday, so I thought I'll hit the middle of the week with some investing guides for every stage of your life. And we'll talk about different stages of your life and how you should look at investing at that point of time. Because some of you in my viewer group are in early stages, some of you are in middle stages, some of you are approaching retirement, and some of you are almost at retirement. I would say the vast majority of you are still in the second stage or the first stage. So, like I said, four stages: earning stage, middle stage, which are the working years, approaching retirement, and finally retirement. So, each stage in your life, your investment needs are different. So, your investment portfolio looks different. The instruments you use to invest are different because your goals are different, and your runway is different, and your appetite for risk is different. Do keep that in mind when you watch YouTube videos and you watch Anand's advice. Yes, these are very generic videos, and some of the things Anand is talking about may be applicable to some people, but it's definitely not applicable to all people. So if he says you could consider buying something, that doesn't mean you should go out and buy it. Yes, he says you could consider buying, but he doesn't mention the extra caveat if it makes sense for you, taking your goals and everything into consideration. He takes that as a no-brainer. That how you do not go buy a car just because you see an advertisement. He assumes you do not just go buy a share because Anand talks about it. But I know, interacting with you guys on a personal basis, all of you don't look at it like this. All of you take Anand's advice as verbatim and know that you must immediately act upon it. Because that's the way I understand. When you don't know economics or you don't know about investing and you don't know about shares and you find someone trustworthy, you tend to do whatever they tell you to do. And Anand does not tell you what to do. That's a major clarification which I want to address first. Anand is not telling you what you should do. Though his language may come across like that, Anand is just sharing information. And you have to take a call on where you are in life, what your situation in life is, and based on that, decide. Because a lot of you say, like, Anand sir did not talk about Wipro. Now he's talking about Wipro. Or Anand sir was talking about TCS. Now he's not talking about TCS. Anand sir mentioned Mahindra Holiday Resorts. But he's always told us to look at the PE. But if you look at the PE, it's somewhere else. So why would he recommend this? These are all valid questions. That's why you have to do your research. Anand has done his research. So based on his research, he straight goes to the answer. He's not talking about how he did the process of doing the answer. Like if you have ever had a friend who was very good at mathematics and you're studying together, when you're doing any kind of tough mathematical problem, someone who's a layman like me would like to see all the steps leading to the answer. But if you're a very smart person, like Anand is, you'll skip steps because you'll start doing the sum of it as mental maths in your head. So you know, if that equation looks like this, it will become like this, and he moves on to that. So lots of steps in the middle he'll skip, and he'll go to the answer. Someone like who's a layman like me, if I skip those steps in the middle, my answer finally will end up wrong. So this is the reason why I thought the impetus of this video is to explain. You should first take an assessment of where you are in life before you go ahead and start investing. So the first stage most of us will enter is called the earning stage, starting to earn. So here the investment should become, if you begin this early, which is like Shashwat or just about Kesav, in that bracket, you should be investing early and you should invest regularly because you have a huge time advantage of many, many years ahead of you compared to someone like me or even Anand. So early steps, including making sure you don't have any debt. So don't worry. If you've realized this watching Anand's videos now and you want to get into investing and you're this young, first thing, get rid of all your loans. Get rid of the credit cards, get rid of the personal loans, relative loans, family loans. Close all the loans. You have time. So don't panic and say, okay, I must start. Should I invest some money and should I, close the debt slowly? No. You're very young. You have a lot of time. So get rid of all the debts. So your focus should be closing the loans. After you've closed all the loans, invest first in education. Like I said, not in stock market, not opening a demat account. Education. Education is not school or college. Education is buying the books and sitting and reading about investing. Finding out what is investing. Read all those books Anand always talks about. That is what you first invest in. Second thing you invest in is career skills. What vocation are you doing? Are you a programmer? Invest in attending more certification programs. Invest if you're a camera photographer, videographer. Invest in learning more about photography and cameras and honing your skills, because that is very important, more than going and buying shares. I know this sounds very weird that we're not sitting on a channel where we're supposed to be talking about investing in shares and stock market. He's first telling me if I'm this young to first close all my loans, then after that to buy books and read books, and then because that's the reason. Because all this builds a foundation for your safety net, your financial safety net. Start a retirement account at that point in time. Once you've done all this, start a retirement and start choosing your investment options based on what will be your tax implications. So if you're working for a company, you're an employed person, your tax is cut at source. So what are the investments you're going to make? What are going to be the implications? What tax bracket do you fall in? If you're a consultant to a company, what are your tax options? Start learning all that. Start learning how tax is done, how tax is paid, how you're taxed, and how you can be smart on trying to reduce your tax burden. This is something which most youngsters don't bother even doing. Like finish college, apply for some job, get the job, starting a salary. 10 years in, 15 years in, they're like, oh my God, being an adult means all this? Yes, it does. And the funny thing is, you were an adult when you left college and you took your first job. So the sooner you start doing all this, better. And when you start doing all this and you've come to an understanding of all this and you start your first portfolio, keep it simplistic, like a minimalistic portfolio. That means you put all your money in passive funds. Like I explained on the video previously, why you should put in passive. On the long term, passive funds are stable growth. Even if the market corrects and there's huge variation in the market, its variations are smaller compared to the market variations and other funds variations. And in the long term, it gives you good returns and it's stable. And as you're learning about stock market and you're learning about how to invest and how to pick stocks, you keep your investment going in passive form without worrying about it too much. So this is what you do if you're in that stage in life. Next stage, which comes the middle working years. That means you're 35 to around 45. Now you have hit upon my video or Anand's videos that you've been watching it for a couple of years and you're like, okay, I've not done it now. So what do I do? So this stage in your life is your peak earning years. This is the stage where you'll be making the maximum amount of money in terms of bonus, in terms of switching jobs and getting that salary increment. So these are your critical earning years. And you'll have to support paying household. If you have kids, you have aging parents, and all this will come into the mix. So priority should include continuing your education, right? Keeping funds available for your kids' college and investing towards that. And protecting whatever assets you already have, okay? And making sure whatever your investments are, you're working against fighting inflation. So this is very important. And this is a point when you should definitely have a financial advisor. A SEBI registered financial advisor is a must. And I strongly advise you, if you're in this stage in your life, instead of watching YouTube videos and saying I can read books and figure it out all on myself and make mistakes, because you will figure it out. Trust me, me and Anand figured it out. We made lots of mistakes. We could afford to. You can avoid making those mistakes if you get a financial advisor. Because those people will be able to tell you where you can potentially make mistakes and make sure you don't make those mistakes. That is why financial advisors are there. And I strongly advise you at this point in time to definitely have a financial advisor. And your portfolio at this stage in your life should have a balanced approach and keeping different time horizons in check, because you have different goals. You have your kids' education, you have your retirement, you have your aging parents fund, you have different goals. So your investment should be divided into different categories and different pockets. And you should adjust your portfolio for each one based differently, because each one has a different risk value and has a different timeline horizon. So you have to match it, and different ones have different targets to reach. So you should adjust your portfolio accordingly and go. So this is how you look at your middle years. Third stage in all this is called approaching retirement. That means you're reaching Anand's age. Another 10 years, you're going to be retiring. You're going to reach 60 plus and you're going to stop working. This can be the most nerve-wracking phase because your earning years have become very limited. If you just now watched the video and you're at the stage in your life, I can understand the sudden fear, realizing that you have not done anything, you have not made any savings. Oh my God. Well, it's still not too late. Here, your priority should be creating financial safety nets for yourself. That means including insurance, health insurance, and investing in such a way that your portfolio is gives you adequate coverage in whatever minimal time you have to invest in. And think about how you're going to withdraw this money and how will you need these funds when you retire. Do you need it monthly? Do you need it yearly? Or can you leave it there for longer periods of time? All this is something you have to weigh and consider. And your focus should shift in protecting the wealth, whatever you have accumulated, and preparing for retirement. You have to stop thinking about market swings. You have to stop thinking about, I'll invest in this and it'll grow in 15 years, 20 years. You reach a stage in your life where all that doesn't matter to you anymore. For each person, different things matter in different stage. Like at that stage in your life, romance movies might not be something that attracts you anymore. The same way you should feel towards all the stock news which you hear, all the market news which you hear, because the timeline which you're talking about, most of these things will not affect you. And most of these things will not give you the kind of returns you want, nor will you have the risk appetite to take these kind of things. So that's what I'm trying to tell you when you look at it. Like how in different stages in life, you lose interest in certain things. You should also keep this in mind. Some of the exotic investments which are there, which you can do in your younger and in your middle years, those are really not something for you right now. Okay, we talked about 3 stages so far. The fourth and the final stage is called the retirement. Retirement is transitioning from saving and spending from your portfolio. And this can be a very scary thing because for the first time in your life, there is no salary coming. And when the salary is not coming, it can lead to severe anxiety. And I've seen this in a lot of people who have retired early. The first few months, years can be very taxing on them mentally, leading to a lot of anxiety because they're not getting a monthly salary anymore. This is something to keep in mind. Keep yourself mentally resilient and prepare for this. And consider keeping your goals such that they meet whatever expenses which are coming. And your income should be guaranteed to give you annually, quarterly or monthly, whatever you've worked out it to be. And your investment pattern should also be like that. And most importantly, your portfolio should also be flexible. Because your plans at this stage in your life, if you don't have insurance cover or you have not made any savings and you only did it in the last few years of your life, whatever you have put in the market or whatever you have invested in bonds or gold or whatever should give you flexibility. So don't lock in things for a long period of time because you have reached a stage in your life where you don't have a long period of time. Sometimes they'll sign you up in HDFC Max or in ICICI, some prudential thing where you have to pay for the next 15 years and after 15 years we will give you XYZ. You don't have that. You're 65, you're 70. You don't have that much time and you thinking something, looking like that and getting locked into something like that is dangerous because you'll never want to even be there to enjoy it. Most human beings have a mental model that we all imagine that we're always in the same age in our mind. If you really think about it, you don't feel like you're 45, you don't feel like you're 24, you don't feel like you're 18, you don't feel like you're 68. You feel like you've always felt all your life. But age is real and it does add on. Every second it keeps adding and finally adds up to a huge amount by the time you reach the age of 70 plus. So you should keep all this in mind when you're investing. So I've spoken about the 4 stages and this is what I want you to remember when you watch Anand's videos or my videos or Shashwat's videos or any other video, financial videos about investing. First, slow down, take a beat, see where you are, what you want, what you need. Based on that, then take the information and process it. That information, does it make sense to what your goals are, where you are? Does it fit? Then act on it. If it doesn't, it's just noise. It's just information. It's a nice video which Anand spoke about. Yes, it's interesting. I didn't know about it. It's a learning video. I enjoyed it. Don't immediately get into an anxiety mode and say, should I be buying this? Should I be buying that? You shouldn't be doing that. Anyway, I hope you found this video informative and entertaining as always. And I'll see you in the next one soon. Thanks. Thanks for watching me today. Bye.